When interest rates on US Treasury bonds move up, it leads investors to reallocate capital from risk assets like stocks and into Treasury bonds as they see the higher interest rates as more attractive. And we think that is what's happening today. Of course, a further move up in interest rates could spark more downside in stocks, but as soon as interest rates reverse, you're going to see a violent leg up in stocks. The question now is, how high can interest rates go? At the end of the day, long-term interest rates in the United States follow what's called GDP growth. GDP growth is essentially how much the total US economy is growing each year. Right now, US GDP growth is hovering at around 5%. And surprise, surprise, the 10-year government bond yield is hovering at around 5%. Over the last year, GDP growth has gradually been trending lower. And we think there's a good chance that this trend continues, or at best, that GDP growth stabilizes at around 5%. So that means at most, the 10-year yield should be hovering at around 5%. We don't believe that we're going to see a big pickup in GDP growth anytime soon that could cause long-term interest rates in the US to spike much higher. So zooming back in on the recent action on the 10-year government bond yield, it's not impossible that we see interest rates rise a little bit more here to hit 5% or 5.2%. But that's really the maximum move up that we'd expect to see before a big reversal. So putting all of this together, we're more constructive on stocks now than we were at the beginning, than we were back in December. We're not ruling out the possibility of a final move down in stocks if interest rates continue spiking before the stock market moves higher. The maximum drawdown target that we've highlighted to our clients is 5,600 points on the S&P 500. The bet that we are more confident in the short term, however, is gold. Gold began a brand new bull market in 2024, breaking out of a long-term basing pattern. Over the last few months, we've also seen gold consolidate a little bit, but if we add some key technical levels, we see that gold has just bounced off the bottom of a key price channel. We actually sent out a few buy alerts to our clients, initiating trades on gold mining stocks that we think can outperform significantly if the gold bull market continues from here. If you want to follow all of our trades, buy and sell alerts as we're making them in real time, and also know exactly what we're thinking about when it comes to each trade, make sure you subscribe to our website at bravosresearch.com.